Hi, I'm Michael Tazzani. I've just a little background about myself. I've been involved in digital currencies since 2003. I've had a background in IT technology. I used to be a IT manager for McDonald's Corporation. Then I switched to finance. So and I got a degree in finance and economics. So I've been in digital currencies for a little while. I have a background in IT and finance and economics, and I have been in Bitcoin since like early 2011. So I've been in it for over 10 years now. And one of the things that I've been doing quite a lot over the last 10 years is just kind of trying to figure out the best ways to teach and explain what Bitcoin is and how it works and basically what is the purpose of it and why the hell it's going up in price if people are looking at it wondering what's going on. So to save time in the future, I figure I would record one of the interactions or interviews or question and answer sessions that I would be doing with somebody else so that instead of me having to repeat it to others, it'll be available for people to watch online as well. So this is Heather. She has doesn't really know much about Bitcoin, I'm guessing.
No.
Kind of a good case because then I'll go through explaining. I'd like to do it where I would go from the very foundational fundamentals, like what is the basics of how it actually interacts, and then from there build up to kind of the bigger picture. And then if you have any questions, please free to let me know about that too. So, and since you don't know, and you do you have any IT background at all?
No.
That's perfect. So, gonna keep me as simple and as basic as possible. So, the way I like to kind of describe it from the beginning is, uh, for those who don't know, a ledger is just a list of accounts. So imagine you have a piece of paper, and there's a list of accounts on that piece of paper. So it would have like Heather, and it would have, let's say, 5 Bitcoin next to it, and then Michael, and it would have, let's say, 3 Bitcoin next to it. And I have this piece of paper with a list on it, and you have a piece of paper with a list on it. So if I wanted to send you some money, what I would do is I would take out a piece of paper and I would write down from Michael's account to Heather's account, send, let's say, 2 Bitcoin. And I would sign it like sign Michael Tazzani. And I would give that message to you. When you receive it, you would see a message that says from like Michael's account to Heather's account, you send 2 Bitcoin. So what you do is you take out your ledger, your list of accounts, and you would add two to your name, and then you would subtract two from my name. You following me so far?
Right.
Right.
Yeah. So, right. So you're doing that, but then I'm the one that's actually making the adjustment at my
Yeah,
end.
you have your own list of all the accounts, and you just every time you receive it, you make the adjustment. And then I would do the same thing. I would make the adjustment on my own. And the way this message is broadcast is I'm not giving it just to you. I'm giving it to everybody. It's public. Like I'm saying here, world, listen to this transaction. And everybody who has their own kind of a list of names, they also check that message and they adjust it on their own as well.
So what's to stop me from adjusting? You give me two, but I go, oh, I've got five.
Well, yeah. So let's say I've at this point, or I make another message and I say from Michael to Heather, let's say I want to send 6. And I give you this message. When you receive this message, you see 6, but you look on your account that I only have 1 left at this point. So you just take that message and like there's no money in it, and you ignore it. It's false. It's fake. Everybody else ignores it too because they can see that I don't have that money in my account. Or let's say I write a message that says from Bob sent to Heather, let's say like 2 Bitcoin or whatever. When you receive it, you look in your list and there's no Bob there. So again, it's like where's this money coming from? So you don't know. So again, you reject it. So it doesn't exist. So in essence, every transaction, this message is a transaction that you receive. You and everybody else, they look at it, they verify that the person sending has that amount in there, and if it doesn't exist or there's no money in there, then they reject.
Okay. So it puts a responsibility on me to do the background,
Checking, right?
the background checking of
Yep,
whether I accept this or I don't accept this.
correct. And every wallet that you use. So these ledgers, that's what when people say the blockchain, that's what they're referring to. This blockchain is basically a ledger of every single account that exists in the entire Bitcoin world. And if you use a service like Coinbase, or if you use a wallet on your phone, um, or if you actually run your own ledger on your own computer, uh, if you have a ledger on your computer, it's simple enough. You have the entire database there. If you use Coinbase or a phone-based wallet, it'll automatically connect to random server out there that has one of these ledgers, and it'll just do the verification for you. So it is kind of, if you're doing it everything manually, it's your responsibility. But if it's done just by an app, it does it automatically. If I was to send you a fake transaction, your phone will just look at it and say that there's no money in there. Just ignore it.
If it's done on an app.
If it's done in that, yeah.
So you said three ways. There's if it's done on an app, if it's done on a ledger, and what was the other third one?
Coinbase does it for you, where Coinbase coins. Coinbase is like a bank, so they manage all that stuff by yourself. So they have their own ledger. Then on an app, it connects to somebody's random ledger just to verify it, and sometimes it connects the two to cross-check to make sure they're not lying. Or if you have your own copy of the ledger at home, you can verify it yourself against the database. But again, it's done automatically by software at this point.
So if someone's just setting up at the start, so
Mhm.
like me, you've like no idea. It's
Mhm.
like speaking another language, in another realm. Then how does one decide whether they're going to do a ledger, the one of those ways, and then is there a way that those things interact, or they're three separate things that never the twain shall meet?
It's all one thing. It's just that there's a copy of this ledger someplace, and whichever way you go, where there's like 10,000 copies of this ledger, a lot of people have them. So whichever way you choose, in the background, it'll automatically just do it for you. It'll just check the background for you. So if you were to install a phone app, just a phone wallet, it'll automatically do the checking for you by connecting to one of these ledgers and cross-checking against it. If you have a ledger at home, whatever software that runs the ledger will just automatically cross-check against it. And if you have it on Coinbase, Coinbase will automatically cross-check against it. So you don't really have to worry about it. It exists there, and that's how it knows whether transactions are real or not.
So what happens if the app falls over or the Coinbase falls over?
There's 10,000 copies of plus of these, probably about 30,000 at this point, of these ledgers out there. So um, there's enough backups, let's say.
Okay,
And they're all exactly the same. And they all cross-check against each other constantly as well.
all right. And so if you're talking about Bitcoin and you're talking about coins, so
Mhm.
again, first, it's like what is Bitcoin and what is a coin and what do you do with it and
So,
why would I actually go there?
right. So the difference here is that instead of a name like Michael and Heather, it we just have an account number, and the account number is just randomly generated every time. That way, that if you can see an account number, like when I send a message from this account to that account, I know that this is coming from me to you. But everybody publicly looking at this message, they don't know who the account belongs to. But that's effectively how Bitcoin is sent, and that's how it works. And um, regarding, there's a question that like, well, can't somebody just print more Bitcoin? Because it's digital, so you're assuming you can print it. The reason you can't is because all the Bitcoin that exists is on that ledger. So like I said, if you just make up new Bitcoins and print new ones in some account that doesn't exist, or if you send, like I have one Bitcoin in my account and I send like three or something, everybody automatically checks against the ledger and they see that those coins don't exist and they'll just ignore the new prints. And the reason that this is done that way is so that everybody can verify uh, the balances and the systems and the total amount of money on their own. So instead of having to trust a bank account or trust some other third party or something that's holding your money, everybody has access to all the information about all the money that's supposed to exist and all the money of who has what, basically.
Okay. So I'm curious, the word supposed to exist. What is supposed to exist? So does it exist or doesn't it exist?
As in, like if you ask how many dollars are out there, um, nobody actually really knows. The banks don't know because I mean they print money in paper form, but they don't know if that money actually exists or not because it might be destroyed. Different banks issue their own loans, so they create currency to issue a loan, and then the government or other banks might not know if it was issued. And with Bitcoin, since all the money is listed in these accounts, so you know exactly how much the total amount of money exists at any time. So it's supposed to exist as in we know that currently there's some, I think like 16 or 17 million Bitcoin in existence, and you know that it exists because it's all listed in the entire ledger.
Okay, so you're saying you can't just go and print more money. So, but new coins come up all the time. So, how legitimate are the coins? Because I hear things that people buy in and they're a thing, and then they're
Mhm.
suddenly gone. So, how does that work?
So you can think of it as we have dollars, and then somebody looks at a piece of paper with people's faces on it and numbers, and they make up their own uh, their own pieces of paper with their own numbers and their own people's faces on it. There's been a couple of like alternative local currencies like Ithaca dollars and some, or there's countries that create, small countries might create their own currencies. So just like those currencies have really nothing to do with a dollar, and let's say if Venezuela makes their own currency and then inflates it to hell, Venezuelan currency will crash, but it has nothing to do with a dollar. In the same way, somebody can take the concept of how Bitcoin works and just copy it and make their own money, but it's not Bitcoin. It has no effect or no relation to Bitcoin itself as well. Does that make sense?
Mm, tell me some more.
So another comparison is like you might have gold or gold coins, and then
Yeah,
somebody says, well, coins is a good idea, so they start making coins that are copper, but copper has nothing to do with gold. So
right.
yeah, it's just somebody making up their own money. Like kids might make up little money on pieces of paper and start passing them around, but they the market of that money is limited to just those people who use it, and it's not interchangeable or affecting Bitcoin or anything else itself.
Okay.
So think of it like multiple foreign currencies.
Okay. So there's bitcoins, but within bitcoins, there's a whole lot of different coins inside Bitcoin. Is
No,
there?
no.
No. Bitcoin is just one.
Bitcoin is Bitcoin, and then there's other currencies like Ethereum is by itself, Litecoin is by itself, Monero is by itself. These are all different names of currencies. They try to compete where they have, so they might have like more anonymity or more functionality or some other, like they might settle faster, but they're totally different technologies. They're not interoperable.
Okay. So so then some people just go down that lane and then they can only use that within that in that space. Whereas
Yeah.
Bitcoin's so it's been around longer and then it's more usable
Yeah.
around the world.
That would be like network effects, I guess, for that. But yeah, it's like you have euros and dollars, which is a simple comparison, or Australian dollars and the US dollars. Australia can make all the dollars at once. It has nothing to do with Bitcoin. Same as other currencies can make all different coins and they have nothing to do with Bitcoin as well. But yeah, regarding uh, being first, so there are a couple advantages to Bitcoin. This is actually what made me figure out uh, its potential almost right away and early on. Um, actually wondering if I should maybe go back to uh, what I was talking about with regards to ledgers. Yeah, let me go back to that. So with regards to ledgers, that's what prevents it from people from inflating Bitcoin itself. They can copy Bitcoin, but they can't inflate its own Bitcoin. Kind of like people can copy the dollar, but they can't print dollar. Well, like not legally anyway.
No.
Right. Um, the concept of why is it called a blockchain? Uh, so another kind of a technical thing, but I'll try to simplify it. So the biggest problem that was trying to be solved by Bitcoin is that everybody has copies of this ledger, of accounts and balances. But let's say what is stopping me from writing a message where I'm sending you a Bitcoin and then at the same time writing a message where I'm sending somebody else a Bitcoin at the same time.
Mm.
I can send you this and it's on your ledger. I can send this to somebody else and it's on their ledger, and now their ledgers don't match up. I'm like, I just spent money twice. It's called the
Yeah.
double spending problem. So the way they fix that is every, uh, on average, every 10 minutes, computers collect all the transactions that have happened in the last 10 minutes. If there's duplicate accounts, they pick probably whichever one came in first, but they only keep one. And then they try to create a digital signature that kind of like encrypted or coded up in a way that it would be very, very difficult for somebody else to copy that signature. So how do I explain this? Um, let's say um, it's called hashing, I guess, but let's say you have 6 dice and you have throw the dice and you get random numbers come up. And I give you a goal that in order for you to find it to have a successful throw, you need to have the first 2 dice that be 1 and 1, and then the rest you can do whatever you want. So if you throw it, it might take you a couple of chances to get it there, and then you get 1 and 1, and that's the solution, let's say. And then if I want to make it more difficult, I can make it so that like the first 3 has to be 1. If I make it more difficult, I can make it so the first 4 have to be 1. So that's how I make the problem more complicated. So and what these computers who secure the blocks do is they say, oh, everybody in the network says, okay, we all agree is that by current rules, you have to throw the dice, and the first, let's say, 10 of those dice have to be ones. And we all understand that statistically it's very, very difficult to get. So everybody's trying to throw these dice over and over and over and over until somebody, aha, I found the solution to make the first dice be 1. And when they can do that, they take the solution, they take all the transactions that happened in the past, they combine them together, and that becomes a block that is kind of signed off by the solution of the first number of dice. So if somebody else wants to take a transaction that's locked in that and change it, they would have to go and throw all these dice again themselves to find the exact same solution again, which obviously is going to take a lot of dice throws and a lot of like a lot of difficulty. But by then, somebody else is probably already finding the next step and the next step and the next step.
So, so what are those? I get throwing the dice and it creates new steps, but what are the new steps actually doing?
The next steps is basically throwing the dice again. So why is it called the blockchain? Is because every time you have this block of transactions, what it includes is all the transactions that have happened since the last solution was done, plus the current time, plus the solution of the prior block, which links it to make sure that it's one block after the other, making it sequential. That's what makes it a chain, because each block comes after the next and it's linked directly to the next one, plus the solution. So, sorry, that's a lot.
So we're creating. What are we creating a solution to?
We are creating, all we're doing is we're creating from a mathematic point, it's, you take the number, sum of all the transactions, plus the sum of the number of the prior block, plus the the date, plus a couple of extra things, plus just a random variable that you add to it. And it's supposed to come out, when you put it in this complex formula, it's supposed to come up with a solution that has the first couple of digits being zeros or ones or whatever. So it's kind of like dice, you throw them and you have ones, but in here it's just this crazy formula where if you put in a bunch of numbers, you get this solution number. And
And, and I'm still not getting what is it a solution to? What was the problem that,
right,
that
so
this is solving?
the problem is that you end up with a solution where all of these numbers in there just give you a number that starts with a certain number of zeros. And in order to reproduce and come up with the same kind of number that also starts with a bunch of zeros, you need to do a whole lot of work in order to, of guesswork, of throwing dice and dice and dice, because there's these I'm gonna get math a bit. These functions that are made, uh, they're one-way functions in a way. So I'm gonna bring it up from like lower level to higher. Remainders, let's say, if I divide 17 by 5, that it'll actually be 15 divided by 5 is 3, and I have a remainder of 2.
Mhm.
But if I was to tell you that my solution is 3 and my remainder is 5, uh, you don't know whether the initial number could have been 15, it could have been 20, 17 or 20 something or something. Like, you don't know where I started, you just know the remainder. Um, anyway, in simple terms, the hashing formula is a formula where you can put in the numbers into it and you get a result. But if you know the result, you don't know what numbers actually go into it. So you have the only way to get the result is to try a bunch of different numbers over and over, just like you throw dice over and over. So the solution, just all it is there's a number that has a certain number of zeros or ones at the beginning, and all it says is that because of how difficult this number is, it's proof that you actually had to throw a lot of these dice to be able to guess this number, because statistically it's almost impossible to get. So there's a concept called proof of work, which is what is used in Bitcoin mining. So if we know that this formula can only be done one way, where you can't start with a solution, come on with inputs, you can only do the inputs and come up with a solution. So we know it's a one-way formula, and we know that the result of the formula is set up in a way that there's a certain number of ones at the beginning, or zeros in Bitcoin's terms, that it would take a lot of guesses to be able to guess it, just like with dice. And then we know that somebody probably spent a whole lot of work trying to guess this number. So this is a way to prove that somebody did all this work to guess the right number, basically.
Okay, so
Yeah, and this is getting way more complicated
no,
now, but
no,
it's
I
technical.
love it. But yeah, because I mean, these are questions that people are going to ask, and I still come back to
What is it actually solving?
what is it? What is the problem that it's solving, and why
Right,
would someone do it? And so it's almost like take it back a few steps. Well, the
right.
reason someone's going to throw all these dice to get all these
Gotcha.
numbers is because
Right. So you have this proof of work where you proved that you've done all this massive amount of guesswork. This is what miners actually do, and the
well,
re what
and what are they doing the guesswork for?
so what they're doing the guesswork for is that if you know that your transaction has just been included in this block signed by this gigantic number of guesswork, you know that in order for somebody else to change your transaction, somebody else has to do just as much work, guesswork, to make a block that is as complicated or more complicated than the block that was just done. So right now, if I was to make a transaction and then some miner someplace managed to guess the number and put my transaction into a signed block or transaction signed by this number, in order for me to be able to, or anybody else, to be able to reverse that transaction, they would have to make as many guesses to guess that number as the entire world is currently doing at the same time.
So then, is that a way of keeping that ledger, that transaction safe? Is that
Yes,
part of because
exactly.
we've done this exchange, and then here's a whole lot of data information that makes sure that this simple transaction is secure.
Right.
Is that is if I'm breaking it down, is that what we're looking at?
That's exactly what's happening. So if we make a transaction and it's floating out there, and I can make one transaction to you and one transaction to somebody else,
Yeah.
right now it's just floating someplace and we don't know which one is right. But then once a miner picks one of those transactions and puts it in the block and finds a solution, in order, like, one of those transactions get thrown out, and now this transaction is locked in the Bitcoin ledger, the blockchain, and in order for that, uh, so that there's I don't even know the number at this point. It's not billion, it's not trillion, it's not quad. It's like the massive
No.
whatever number. I think it's like 5 billion, whatever. number of guesses of dice rolls is being done every single second to get this single number, which is like a crazy amount of power and guesswork going into it. So in order for somebody to take that transaction that is now in a block and invalidate, they alone by themselves have to do these like five whatever trillions of trillions of guesses a second in order to come up with to be able to come up with a solution as complicated as was come up to lock in this transaction.
And,
And then
and
if they do, then they can say this is the right block and they can make their transaction go away. But the chances of that happening are almost impossible.
so basically it's a way, if I'm putting it in a very layman's term language, it's a way of stopping someone from stealing. You know, you're saying, here you go, Heather,
Yeah.
here's some dollars, and it's a way of stopping someone else inadvertently coming in and saying, oh, no, that's mine.
Um, it's more like it's stopping from somebody from like me saying, here's a transaction and I'm sending money to Heather, but secretly saying, here's the same transaction and I'm sending money back to myself or sending it to somebody else.
Right.
Right. So it prevents people from being able to spend more than once, and it also makes all transactions permanent. Where if it wasn't for this, I can say here's money, and then later on I can come back to the block and say, okay, this transaction never happened, and you just pull it out of there, and here's a new block, and this never happened.
So it's pretty much set in stone.
It's set in stone, right?
So then, in theory, but you can tell me different, then no one can come along and rob the bank.
Right. So they can, but they would have to have as much mining power as all of the world combined. So, I mean, let's say you and I are throwing dice, and there's like we have 5 dice, and we have to get the first two being one. So you and I are doing, and then most of us have about the same amount of power. So in that case, the chances of you or me winning and finding the correct solution is 50-50. But let's say there's you and another person and another person and another person. Let's say there's 5 of us, or make it simple, it's 4 of us. So we're throwing it, and now the chances of me getting it right is like 1 out of 4. You is 1 out of 4. Everyone gets 1 out of 4. In order for me then to bring it up to 50-50, I have to have as many dice as all the rest of you. In this case, it's yeah. All the miners out there, there's a couple of thousand of them out there. Everybody's throwing the dice. And in order for me to get it 50-50, and this is just 50-50, I have to have as much by myself as the rest of the world. And again, that only still gives me 50-50. So it might even be that I found it and they reversed the block, but they're already working on the next block, and then I have to catch up to them. And, sorry about it. So basically, I have to catch up. Like the block was solved, and now we're competing again, but I'm still having to catch up to everybody else. So it's kind of a losing battle.
So I know I've got friends who say, they're making heaps of money all the time. They're getting these returns. I mean, how do you actually get returns? So yeah, you give me $1, or you give me. Let's just let's just say you give me $100. Then people are saying, oh, I was given this amount, and now
it's worth
and now I'm worth all this much more money, and I'm earning this amount every week, and I've gone from $100 to $10,000 in a short time. I mean, it sounds like a bit It's like it sounds a bit scammy, and I'm like, And then what are the taps? It's like, well, cool. Well, how do you actually use it? There's a bunch of questions. Then how to use it, and then it's like, well, how does the tax work? And I know I was talking with someone, I heard them briefly, and they were saying, oh, well, I'm only going to talk about that. I won't talk about that publicly. And I'm like, well, you're not going to talk about it publicly. How legitimate is it that you're doing this thing that you're doing only off on the side, not really being open about it? So there's a couple of questions in that.
Gotcha. So the technical part, hopefully you kind of got the base of it. So in summary, the reason it can't can't be inflated is because everybody verifies their own
Yeah.
ledger. It can be stolen, well, directly or like fake, whatever, because you everybody verifies it. And it can't be um, financial systems can be really controlled because, in a sense, Bitcoin is what's it called, speech communication. So in order for me to send money to somebody, it's not like I'm giving you a paper dollar. All I'm doing is writing a message that says from this to this, send that, and I just have to sign it with another. Well, it's a private a key, I guess, but it's just a digital signature, which is also once again a message. So when I'm sending it to somebody, all I do is I broadcast a message, and I can do it over the internet. It could be over radio. It could be over the telephone. So in that case, it's communication that can't be really blocked or censored by anybody else, which was the point of this money to begin with. So that's the technical part. Where the part was the where you're asking why is it going up in value?
Yeah, like I've got $100 and they're saying, "Oh, I'm getting great returns." I'm like, "How are you actually getting returns? How does that? How
So
does
we
that?"
know that Bitcoin cannot be inflated. It's impossible to do because if somebody tries to make more, everybody else. Regarding language, um, there's a term called protocol, but not important. So Bitcoin is a language in that you yourself agree to a set of rules for a language. Let's say we speak English. You and I, we agree how English is supposed to be structured. We agree on what words are, what definitions words have. So we both agree on meanings. Excuse me. If I was to come in and start making up my own words and my own structures, like you wouldn't know what I'm talking about. Nobody else would either. You would just ignore it. Uh, Bitcoin is a language. The computer term for it is protocol, but that's just a fancy word for language that computers use to talk to each other. And it's the same deal where if I come in and I start making up my own transactions that don't exist, or I start making up my own rules that don't exist, you'll just ignore me. It's not like I'll be like blocked or like it's illegal or whatever. Everybody will just like be like, what is this gibberish? I don't understand you. So in that sense, everybody agrees to follow their own rules, and everybody uh, like by themselves decides that these are the rules of the Bitcoin language that I follow. Because of that, and if anybody tries to change them, such as increasing the number of Bitcoins in existence, everybody will be like, I don't understand what you're talking about, and my language is only so much. So that's Bitcoin can never increase. Uh, the reason why it's going up is because the total amount of Bitcoin that'll ever exist will be 21 million, never more. However, each Bitcoin is divisible down to 100 million pieces, so it's 0.8 decimal places. So it's 0.00000001 is the smallest Bitcoin bit right now. So it can be broken down enough to be usable. But because the amount of Bitcoin is fixed, and that entire Bitcoin will have to encompass the economy of the entire world. The more people buy into it, the more of the demand goes up. Because the supply is fixed, the price has to expand to encompass that. So, with regards to why the Bitcoin price has been going up, that's basically because as more and more people keep buying Bitcoin, as more and more businesses buying it, and there's more of the economy of the Bitcoin, like pretend it's a foreign currency and was a foreign country that only exists online, the bigger this country grows and starts to adopt Bitcoin, because there's not enough of it, it has to go up in value by necessity, basically. Um, that's an economic supply demand thing. That's like the most. If demand goes up and the supply stays, prices will have to go up. So, like if the number of houses in place is fixed, demand goes up, houses go up. Yep.
Houses go up. So then, someone saying, "Oh, I'm getting like it's like $300 something a month return on her."
So that is just a regular investment. That's not nothing to do with Bitcoin itself. The same as somebody investing stocks or property, with property-backed securities or gold-backed securities, and they just make a little bit of money on their own. that's not a property of Bitcoin. It's a property of somebody doing investing with it.
Okay.
Yep.
So, well, what's the difference? I'm just going to check. I'm just going to see how they languaged it.
And
Oh, okay. So this particular person was saying that it's a new, um, a new digital
currency.
currency. Um,
So there are some different digital currencies that promise that if you invest in them, they'll pay you a little bit more. But as an economist, I'm of the beliefs that wealth is kind of like matter and energy was Newton's law of that, where it can't be created or destroyed.
mhm.
In the same way, wealth can't be just created; has to come out of something. So if all I do is make more money, let's say you have 5 of these coins, and then 10 of these coins exist totally, and I give you 5, and I own the other 5, and then I just make another 10, so I give you 5 and myself 5. I didn't actually create 5 coins worth of wealth. I just increased the supply of coins, so now the value of them will probably be worth half as much because the demand for them is the same. So it's kind of got to be wary of those things. Um, regarding um, so more of a on the economic and financial side, I guess. What convinced me about Bitcoin in the very beginning?
And how long ago was this? Just to let
2000,
people know you've been doing this.
2011.
Okay.
I was lucky in that I had already experience with digital currencies and also IT and also finances and also economics. So while there's a lot of people who heard about Bitcoin and kind of dismissed it for many years and then came back to it later and figured it out, um, I figured it out pretty quickly after spending about 2 weeks of like really deep diving into it. So the key components that made me realize this, one of them is network effect. Network effect is that the more people use something, the more valuable it becomes. So for example, if you wanted to buy or sell a used item, you'd probably go to eBay. If you wanted to sell, you go to eBay because that's where most people are shopping.
Yep.
If you want to buy, you go to eBay because that's where most people are buying.
Yep.
Same deal was like why do people use, let's say, Facebook or Amazon is because where most of the people are. So the more people use it, the more valuable it becomes. Like,
It's just
or
a,
yeah,
yeah.
like if two of us had a fax machine, that's great. We can fax each other, but it's not as much use. If everybody has a fax machine, it becomes more valuable. Money has very, very, very strong network effects. The more people and the more businesses use money, the more useful it is because you can transact with more people. Um, and because of that, and also there's um, yes, frictions you can call them. Like if you use Australian dollars and I use regular dollars and somebody uses Canadian dollars, every time we want to exchange, there's friction where we have to
Yeah.
convert money to another, and uh, it's just
Pay someone
pay
else for
somebody
the
else.
privilege of doing that.
And so people kind of dismiss that with regards to like there's different coins and it's easier to swap them. The biggest friction actually comes with businesses because, and I worked at a business that did an international business with international currencies. Imagine you're doing your accounting and you have some of your loans and incomes in one currency, some in another, and now you have to pay some loan in a different currency. Now, on top of being able to do your regular business, you're also a currency speculator because you're like, do I convert now? Do I
No.
wait later? It creates a lot of things, problems. Most people want to use just one currency. And that's actually why for most of human existence, everybody used one currency, which was the gold. Even though we had like different gold coins by different countries, the fundamental was still gold.
Yeah.
The purpose of the coins was just to prove that this is the weight of the gold and that is a not diluted legit gold. The whole um, we call them fiat currencies, the government issued paper currencies. It's a new phenomenon that really only popped up after World War II because countries stopped trusting each other, so they decided to issue their own gold-backed currencies, and then the backing fell apart, and now we just use paper. So very strong network effects with money where eventually one money dominates. So we
Yeah.
have the dollar is the global reserve because it was the strongest and it dominated. And Bitcoin has its own network effects where it has more people use Bitcoin than anything else. And that's probably why all the other currencies, digital coins, are going to go down. And why I believe that eventually, because Bitcoin is so much more better, has so many better features than like government currencies, it's probably going to over time dominate too. Uh, Next one is concept of product versus platform. So Facebook would be an example of a product where uh, somebody owns Facebook. You can do things on it, but it all has to be within
Within, yeah,
Facebook's thing, right?
yeah, yeah.
Something, or actually a better example would be the old telephone landlines would be the product where um, the actual landline, the telephone stuff is owned by somebody like AT&T, and all the innovation for like 70 to 100 years only happened on the end pieces. So um, we had telephones and we had like cordless phones and we had like fax machines and other things, but all of that was happening kind of
It's
at the
still on the,
edges.
yeah,
The core was unchanged for 100 years. Uh, and then internet came in, and internet was a platform, and on top of that, it was an open source platform where anybody can develop right on the internet and any part of it. So that completely changed the dynamic of our communications, where all of a sudden we had competitive innovation within all of this. Bitcoin is the same way in that it's not like Visa would be, or a bank transfer or SEPA would be the product that is locked in and owned by a company. Bitcoin would be the platform where anybody can develop any part of it on top of it in any way, same as internet. It's also an open source platform where, like, we have internet, and people say like, well, we had MySpace, and then we have Facebook, and then we have something else. So wait for the next Bitcoin. Like, uh, so what is internet? We never had Internet 2.0, and the reason is because it's an open source platform where if you come up with an improvement, you just put it on the internet already. The base internet is still the same very, very old technology we had from many decades ago, like TCP/IP. But on top of that, we develop more and more complex things because anybody can, even if it's more convenient to do it on a different network, uh, because internet has this big network effect of people already in there, it's worth it more to develop on top of internet. So it's the same deal with eventually, like, there's never going to be a Bitcoin 2.0 because any kind of idea that is sufficiently an improvement will probably get implemented on Bitcoin itself as well. And then the last one was not as important, but lock-in effect. So you have an Apple product, I have an Android product. If you wanted to switch to an Android product, that would be a major pain for you because you have a lot of Apple apps that you probably paid for. You're locked into that platform, or you're locked into that network. It's the same deal with money. So if I'm using Facebook, it's a platform. It has a massive network effect. But if I, let's say, leave Facebook or I'm banned from Facebook for a week or two or three, I'm not really losing that much. I mean, I can probably use other means to communicate with people, but I'm not. I can be out of it. I'm not really losing anything. If I have $100 bill laying someplace, I can't really abandon it. I'm kind of locked into the money. That is actually worth something. So, and it's the same deal with Bitcoin and other things where once you're locked into it, and also um, as a business, I might have a point of sale system that works with Bitcoin. I might have an accounting system that works with Bitcoin, and then some other coin comes by, and it might be better, but I have all of these things that are designed specifically for Bitcoin, and now I have to pay more to transfer in. It's going to be as difficult as switching from Apple to something else I'm locked in. So putting all those things together was a first mover advantage as well, where all the other coins now have to catch up to Bitcoin. Almost right away, I figured out that not only is this going to probably take over everything else, but it's probably going to be the one to win long term.
Cool. So if we're, one of the things is, I know there are people coming and saying, "Hey, come and buy this," and then it's almost ends up, come and buy this, and there's a team of us, and then we're going to sell it to someone else, and I guess it's like an MLM typey
Yeah.
thing. Um, versus that's not part of Bitcoin. That's going to be another.
Yeah.
That's going to be another coin over there. It's not part of. Or
Yeah.
does that happen in Bitcoin as well? Or
No, the Bitcoin by itself is just I was gonna say it's just money, but it's not even just that. Bitcoin is at its core a ledger of ownership and a communication system for transferring that ownership. So everything else that's on top of that is like somebody saying like, well, there's internet, and then they built some sort of an internet-based like business or application or something, but it's not the internet itself. So same deal with Bitcoin is there's Bitcoin, the money or the ledger of ownership, and other people can build businesses or investments or something on top of it that does something with it as well. The reason I say it's a ledger of ownership is because, as I described, the way it works is I write a message saying from me to you, send so many Bitcoin, and then I sign it and transfer it to you. Uh, but there's nothing stopping me from saying this particular Bitcoin or this particular like smallest, almost worthless bit of Bitcoin is assigned to ownership of, let's say, a car or a stock, a share of stock. And then I can prove that I can publicly post that this piece of Bitcoin is now registered as this piece of stock. So anybody who owns this Bitcoin has the rightful claim to stock in my company. And then I can issue that Bitcoin around. And even though the Bitcoin itself is worth almost nothing, it's now a registry of ownership. So if you have that Bitcoin, you can prove that you own that Bitcoin, but you also prove that you own the stock, or you prove that you own the car or something else. And then there's much higher level things that are being built with that, besides just like home titles, car titles, stocks, everything else. There's also just communications and proof of time. So it used to be that if you wanted to prove that you owned a piece of, uh, let's say, a piece of text or a book or an art, what you would do is you would print it out, you would put it in an envelope and mail it to you, and the envelope is sealed and it's stamped by the post office, so you know that it came there. Now you can take, you write a digital document of a book, let's say, and then you include the book as part of the data of the transaction and send it with one Bitcoin to yourself, so it doesn't cost anything. But now there's a public record of the transaction that can never be changed, but it's timestamped as happened in that specific thing. So at any point you can, hey, there's this book and it's been signed.
So I guess in a way that can stop a lot of like someone say like the creator creates something and then invariably often around the world over the centuries someone's created it but then someone else manages to get it and say no that was mine,
Right.
Whereas it's like you create it and then you send it off straight away and then you've got the evidence.
Right. So,
no, I created this versus that partnership when it falls over or something, someone else saying no, this was mine. It's like, nope,
right.
here's the evidence.
Yep. And what will come in the future? No, I can't say, and most people can. I can imagine, but it's when the internet came out at first, it was a way to send messages in a non-centralized, like decentralized way through networks to people. So all it was we can send text to each other, we can share documents, text documents to each other, and eventually we had a way to do like emails to simulate the post office, but that was kind of it. Nobody back then could have imagined something like where we have satellites in space providing us GPS coordinate position, that we have a map that is also stored in space, that somebody can, in a car, can figure out where they are, where to pick somebody else like Uber. It's like nobody would have imagined that kind of stuff back then. So in the same way that the internet, the platform for communication came out with all this crazy stuff, Bitcoin as a platform for money and finances is just starting to kind of develop all these things.
So, so with this, is it like then public record for anyone can see any privacy? So it's like I can't sort of $10,000 out there. Thank you very much.
So
How does the privacy work? Is there privacy?
yes. Um, so for one, instead of the account numbers being Michael and Heather, account numbers are a bunch of random characters.
Right.
So you can see all the transactions. I can pull up a website and it can show every transaction that's happening in real time. And you can see a list of all the transactions that happened in the past, but who they actually belong to, you don't know.
Okay.
Like, you know what, the reason I can send you money is because you know that this specific account is the one
This
that
goes
matches
to
your
this.
signature, then it belongs to you.
Yeah.
So when money comes in, you know that it's your money. But unless I tell you that I sent it to you, like you can publish your Bitcoin address, they're called Bitcoin addresses for the accounts. You can post it online and you can start receiving money, but you'll have no idea who it's coming from.
Who it's going to.
There are ways to kind of use analysis software to analyze it. So if you have money on Coinbase or some other exchange, they know that this address is linked to your name. And then if you pull the money out and then spend it a little bit, they may be able to track you a little bit through it. But there are more and more methods coming out that make that a little more, break that, break in anonymity. Use break twice. Such as it's possible to make a transaction where, let's say, I need to pay you, and somebody needs to, let's say, somebody else needs to pay for a pizza, and somebody else needs to pay for an Uber, and we can create a transaction where of the three payers put the money on a table, where the money needs to go to who we want it to go, and then everybody else grabs a copy, like piles on the money, then they check the transaction. All they do is they make sure that my money is going to the person I want, and they sign my side. If somebody else takes it, check their money is going to who they want, they sign their side, and it goes around, gets signed by everybody who verifies it. And then in effect, what happens is we throw cash on the table, you take out your piece, somebody else takes out theirs, and who paid who, nobody knows.
Okay, so if I'm doing a transaction with you, then I will then know that that belongs to you.
If I tell you that it belongs to me.
Yeah. So if I'm sending you a bill and going, hey, you owe me 300,000 Bitcoin, then there's that link is going to be with you. Then I know that link is for you with you. That
kind of, you have no way to know if I paid it or if my friend paid it or if somebody else paid it for me.
Oh. Okay.
But I know that that is your address because that money went to you because you told me this address. Right?
Okay. So the people that you're actually transacting with, then
They know.
They know, but then the rest of the world out there doesn't know. So one of the questions that you have people who come up and go, oh, I'm just going to hand you some Bitcoin. Mm-hmm. Like, why are you going to hand me some Bitcoin? Like, I don't walk down the street going, hey, look, I'm just going to hand you $100, But in Bitcoin, people are like, well, I'll give you, pardon?
Has it happened to you?
What, walking down the street or in Bitcoin?
No, it's in Bitcoin.
No, I've heard different people. I've had different people promoting things, and perhaps not Bitcoin. Maybe there were other coins, and I wasn't aware. And it's like, well, I'll give you whatever coin to get you started.
Right.
So that's like me still walking down the street and going, well, I'm just going to hand you over $15 to get you.
So it doesn't make sense if you do that with dollars because more and more get printed.
Yeah.
Excuse me. But I did that myself many times with Bitcoin when I started out just to get people in it. And the reason is that, let's say I have 1,000 Bitcoin and they're worth, I don't know, $1,000 because one Bitcoin is worth one. And I go out and I hand out 500 of these Bitcoins to a bunch of people.
Yeah.
And all these people, now I have 500 Bitcoins, which are worth only $500. But each one of these people, they see the Bitcoin, they figure out how it's working, and they kind of get what it's for. And they see, okay, this is a good investment. So they buy more Bitcoin and they maybe tell their friends about like, hey, this is a thing that's actually really good. And they buy more Bitcoin. What happens is all these people end up buying more and more, but because the number of Bitcoin is limited, the price goes up. So now I have 500 Bitcoin, but instead of it being worth like $500, it's worth like $50,000. So the number of Bitcoin I have might shrink, but the value of what I have left keeps going up.
All right. So
And
even though you've got less, you've got more
right.
in a way.
And Satoshi actually kind of designed this into the system with the fixed amount, where he and we, the rest of us, early understood that the more people we get into it, the more the rest of our money will go up. Which that's going to make a problem where people might say, "Oh, you're just doing it to make yourself richer." It's like, yes, but at the same time, it's I'm not taking your money. I'm giving you something that'll actually make you better off as well.
So
Make
everyone's
everybody
winning.
right,
It's not like, oh,
right.
well, yeah. Okay. So now what happens with the taxes bit? Because so Bitcoin goes up and down. Is that right?
Yeah.
Just like anything, what goes up must come down.
So
So
taxes.
what? But hang on. If we go back,
Mhm.
if there's a limited number, more and more people want it.
No, no, keep going up.
What? Well, but doesn't it go down? And then I hear like, it's gone down. I want to do that. I'm like, what's with the up and down?
So Bitcoin's goal that we're working on, as I mentioned, is to become the dominant money. You can't just have something be owned by everybody without it going up crazy in price. Like you can't have just everybody all of a sudden own, let's say, Google stock. People buy Google stock, the more they buy it, the more it goes up. Same deal as Bitcoin. The more they buy it, the more it goes up. What happens is Bitcoin does have a bit of inflation, by the way. So those people who do the guessing to secure the blocks, that's what Bitcoin miners are. By Bitcoin rules, what happens is that anyone who finds and guesses this number and spends the work to secure this block, by the rules, they're allowed to create a whole new account where with Bitcoin in it, where they're allowed to basically pay themselves. So when Bitcoin started, there was no Bitcoin. Then every time somebody mines, they would find 50 Bitcoin. Um, and then basically, like every time you mine, you're allowed to pay yourself. And everybody who uses Bitcoin, they agree to that because even though the number of Bitcoin goes up, devaluing your own Bitcoin, it's a way to pay the people to secure it. So we're using a, a public service, and we agreed to kind of deplete the value of our own money in exchange for these miners doing it. Um, but the reason it's limited to 21 million Bitcoin is that for the first 10 years, every time a miner finds a block in 10 minutes, they can pay themselves 50 Bitcoin. 4 years later, or actually a specific number of these blocks later, they're on average about 10, but it kind of goes up and down. But anyway, about 4 years later, it gets cut in half. So now only 25 Bitcoin are paid out to miners. Then next year, it's cut in next 4 years, it's cut in half. Now it's 12 and a half. Then it's cut in half. It's 6.75. So basically, every 4 years, this inflation gets cut in half.
So then, you've got. So from what I gather, mining is like a whole bunch of computers in the middle of somewhere,
Yeah.
chewing up mountains of energy and whatever to run. So which is in theory not good. So you're trying to create a better system, but at the same time, it's depleting resources because it's using up a whole bunch of. Yeah, okay.
I'll go into that. I'll be
Okay.
happy to go into that.
But then if the people mining, it's like, they got 50, 25, and it's reducing, why are they going to keep mining if they're only going to get 1%? If it's going to get, they get to 1%, it's only going to get 0.5%. They're only going to get.
So in order to prevent spam, so you don't want people to just flood the network with transactions and then your internet connection is completely flooded and messed up. You also need to pay a small transaction fee with every transaction. So if I was to send you 1 Bitcoin, I might actually send like 1.00001 Bitcoin. You receive the 1 Bitcoin and the remainder goes to the miner. So whoever includes that transaction in the block, they get the 50 or the 25 Bitcoin, and they also get all the transaction fees in there. The idea is that eventually the block reward, that's what it's called, where you get the 50 or 25, will keep going down to zero. And
They
as
get the
more and more and more
transaction.
people use it, it'll get replaced by these transaction fees.
Okay, and so they get a transaction fee for rolling the dice a million times to figure out who's
From everybody who paid
from
in
who
that.
paid to
Right.
work out who
Right.
paid. When they get that right, then it's allocated
Right.
to the right people. Then they get paid to do that.
Right,
So
and was at 21, so you start out with inflation being kind of high, and then it goes 50, and then it goes at 25 for 4 years, and it gets less and less and less, and eventually it kind of flattens out, and that's where we reach the 21 million Bitcoin, which should be um, like 2140 or whatever year. So it's going to take a long time. But the reason you asked, the question was, why is Bitcoin goes down sometimes? So again, supply and demand. We have inflation going on in Bitcoin. We have this new supply constantly coming in, and we have new demand constantly coming in. And then during that switchover period, all of a sudden the supply gets cut in half. So the supply is cut in half, but the demand is still there. So what happens is the price skyrockets up as people try to buy more and more Bitcoin, but there's less of it being made. And that creates called the FOMO, fear of missing out, where some investors all of a sudden sees a price, but they're not the people who understand the fundamentals of Bitcoin. They just want to invest and make some money. So they see the price go up and they buy it just because they don't want to miss out, and that because the amount of Bitcoin is again limited, them buying it causes the price to go up and up and up. But the actual fundamental like economy of Bitcoin might be much lower. Like the amount of people actually use it for savings, for business, for transaction, uh, that would be lower. But the price is now artificially inflated by all these people who are like, oh, I don't want to miss out on it.
yeah.
And then at some point, people realize that either all the people who wanted to make that kind of investment have already invested, or people just realize that it really shouldn't be worth that much, and at that point they start selling, and everybody who's in it who was only to make money, not for the fundamentals, they dump it, and that's what causes it to crash. So that's why every 4 years or so it goes up and then crashes, goes up and then crashes, goes up and crashes. But the number of these decreases over time for two reasons. One is that actually three now. The first reason is in stocks, there's a called market, which if the total value of all the stocks in all Bitcoin is really cheap. Bitcoin in existence put together is worth $10 million. If I was to buy $5 million worth of Bitcoin in the market, I would make the price jump right up because there's very little of it. Like there's a massive percentage. If all of Bitcoin is worth $1 billion and I buy 5 million of it, it's not really going to affect it much. It's the same way with if you buy a small business stock and you like invest 10 million into that business, it's going to be a major effect. If it's like Ford and you buy $10 million worth of Ford, it's like, yeah. So over time, as Bitcoin grows, these purchases and sales will affect it less. The other is that um, when there's very little Bitcoin in existence, and you print 50 Bitcoin every 10 minutes, and that's like, I think it was about 6% inflation. And then suddenly it drops, and there's still not a lot of Bitcoin, but the drop is from 50 to 20, so your inflation rate drops from like 6% to 3. And that's a pretty major change. Later on, when your inflation is like 0.02 and it drops to like 0.01, it's a very, very little effect, so it's not really going to affect it much. And then the third one, it's more recent, is that there's retail investors, which are like people like you and me who just buy stocks. And then there's called institutional investors, and these are like the big hedge funds, the nation funds, the investment funds, the pension funds. And they buy like billions of dollars worth of these investments. So they started coming in last year. With them, if they make a purchase, it's you have a board meeting, you write up the rules, you figure out exactly why you're investing for this thing. It's not just to fear of missing out. It's like, okay, I understand this technology is doing this, and this is our outlook for 5 years later or 10 years later. And they make a decision to buy, and they buy billions of dollars. They probably take all the normals in this entire, we're in Las Vegas right now, put them all together. all their money together is probably not going to be billions of dollars.
Right.
So if all of them sold compared to these institutions, it's really not as much money. So and we actually saw this recently where it used to be that Bitcoin would spike up and it just like crash. But this time it kind of spiked up and it just kind of down. It's just kind of sitting there floating. You know, and it's because the FOMO the retail investors, they do still their like panic sells. But for institutionals, if they need to sell what they invested in long term, it'd be another board meeting, it'd be another review, another agreement, another contract, and then they would have to do it. So it's a lot more work. And they also understand that Bitcoin is a long term hold, not a. So it's being affected a lot less.
Cool. So one of the questions I brought up a couple of times we haven't got to yet is tax. So one of the things that I've heard, and again sat in briefly on, is people were saying, well, if you got your coin when it was worth, let's say, $30, and then it's like, so you got to pay tax on the 30, but then you've dropped, and then the tax is worth, I mean, and then it's gone from 30 to 1, and then but you've got to pay the tax on 30, but now you've only got $1 to pay what was once 30. Like, how does paying the tax? And again, I've heard people are going like, don't worry about that. And I'm like, well, if you've got to be able to get it out or spend it, or like, how can you just not? And again, it depends where you live. I'm talking Australia.
Right.
As you know, our tax is different to Puerto Rico, to Portugal,
right. So
to Florida.
taxes are different in different countries. In some countries, it's treated as there's no tax at all. It's just they don't know what to do with it. In some countries, like I believe some of the European ones, that are used to having multiple currencies because they have the euro, the Swiss franc, and the dollar. Then there's no tax. It's generally treated as capital gain. Bitcoin is considered an asset right now, even though it's money, but it's kind of like gold. So what you do capital gains taxes basically. So if you buy Bitcoin at 30 and now it's worth $1, you only pay tax on that difference, and in that case, it would actually be a loss offsetting your taxes elsewhere. If you buy Bitcoin, if let's say you buy $100,000 worth of Bitcoin and now it's $120,000, and then you sell it at $120,000, you only pay the capital gains on that 20, and that's it.
Okay, and so then, if I want, so there are more and more businesses and institutions and things now that are using Bitcoin, so you can pay with Bitcoin. But if you want to say, okay, actually, you really want to buy that house over there, and I can't pay Bitcoin for it because that person doesn't want Bitcoin for the house, but you really want that house. So how does it go? So I get they're doing Bitcoin to Bitcoin within that economy, within that platform, whatever the language is.
You want to buy a house, and you buy $1 million, you just have to convert your dollars to dollars.
And then is there, because if I'm transferring money over here, it costs ludicrous money to transfer the funds and so on now. So to take it out and to take it out into cash money, what are there fees involved in that? Like, where's the catch?
Right. Depends on the business. So, I mean, if you can convince a person to accept Bitcoin directly, the fee will be like 10 cents to transfer from there. If you want to convert it into another currency, it's just like going to a currency exchange. Some currency exchanges will charge you 1% or 0.5%. Some might charge 3%. Some might be free. So it just depends on.
So if I want to convert it to Australia, say I want to go back home and I want to be in Australia and I've got all these Bitcoins sitting there, and then it's like I actually need Australian dollars, or alternatively, I'm Australian but I'm in the US, like, and I need dollars because the people that I'm working with they're not taking Bitcoin. So
you need to find a service that does the exchange. And there's actually quite a lot of different options. There's a straight up currency exchange called a crypto exchange or Bitcoin exchange. And it's no different from a foreign currency exchange that you just convert Australian dollars to US dollars. Then there's,
Does that happen? Is that an instant thing?
yeah.
It's not like, oh, that's going to take 2 days or 3 weeks or. Um,
So in US, there will be 3 days just because it takes so long to transfer the money from the exchange bank account to someone bank account. But that doesn't have to do with Bitcoin, it's just a banking system. Then there's other services such as Bitcoin-backed debit cards, so like a Visa or a MasterCard that when you swipe, they receive dollars, but on the card is Bitcoin. Then there's, sorry, there are services that sell you gift cards or points or access to specific things. So you can, like if you're using Uber here, you can use Bitcoin to buy an Uber gift card, which will cost you nothing in fees, and then you just transfer that, use that card to top up your Uber account or Amazon account or something else. So
so if you're traveling, that's actually less than me doing it anyway because it's always easier.
So right now in Portugal, and if I do like a couple of $1,000 in order to pay rent, my are so unfortunately schedule an appointment with my bank. I go to my bank. I tell them I need to transfer money to my account. I sign the forms. I pay like $50 to $75 for a wire because my bank isn't that good, and then that wire gets there maybe the next day or the 2 days afterwards. My other option is I go to an exchange and I convert my dollars to Bitcoin, which costs me, I don't know, $2 maybe. And then I send that Bitcoin to an exchange in Europe, which happens instantly, and then like $1 or $2 more. I mean, I'm thinking $2, but I'm not doing the math.
No,
It's like 0.5% of whatever
it's
I'm
nothing
sending.
compared with
Right.
what I'm paying right now.
Yeah, the transfer happens like within between 10 minutes and an hour, and then I sell it, and it's in my bank account almost right away. And if you stay inside of Bitcoin, so a long time ago, I believed in Bitcoin and understood it so well that I moved my finances in Bitcoin. So now everything is in Bitcoin. Uh, then if I need to pay dollars, then I just at that point I convert Bitcoin to
Convert
dollars
it
and
out.
pay it. Or if I need to pay euros, I convert it out. Or if I need to pay some other country, I just convert it out. Or I use one of those many services like a Bitcoin Visa card that I just swipe and pay
So
for it.
cool. So as I listen to you, so I've listened to all sorts of people, not in depth because I haven't focused on it, but
Mhm.
what I get from you is your expertise on economics, on finances, on the tech, and then on Bitcoin. So, as an expert, he takes things to a whole different level to other people that I've listened to because they've had expertise in maybe one of those, but also a lot of people dealing with it that I'm just going to say it don't have expertise in it, so they're I don't know whether the language again because it's a different language, but they're trading in it or but also not necessarily Bitcoin, these other coins. And it seems like, there are coins that are created that then literally just fall over, aren't they?
Right. A whole lot of them, and it's kind of same deal that they don't have the network effect, they don't have the massive support. They might have um, oh, fourth piece is a competitive advantage. So let's say uh, like Amazon exists and it do like a 2 day delivery, and I come up with a new business that does exactly what Amazon does, but I can make the delivery in like 2 hours instead of a couple of days. Uh, would you use my service over Amazon just for those 2 hours? Like, how much is that 2 hours
It's
worth to you
worth to you.
compared to you versus
Mm,
all of these people are using Amazon, all of these
mm.
options, and I have almost nothing. And it's the same deal. Like, there's um, like instead of actually this, 2.5 minutes. But Litecoin isn't really going anywhere because like how much is that worth to people
So,
compared to the network effect, all the development, all the support, all the things that are in Bitcoin. And then if something is significantly better improvement, like there's some coins that are private that they do this mixing thing where I explain where people pile in money and then people take it out. They do it right on the blockchain itself. With Bitcoin, they set up a system where you can do that with special wallets that do basically the exact same thing. So
Okay. So if we look at the early adopters, um, and we're on the so it's still worth people looking to.
we're about, I'd say, internet in was Windows 95 area right now. It's still extremely early. I mean, people look at the price and they think the price is very high and that they're being late. But as I keep saying, the goal of Bitcoin is to replace all money. And because it's a proof of ownership system, it's not just money, it's also like stocks, titles, everything else. And we're not even to a point where people are using it to pay for things yet.
If you're saying there's only 21
Million.
million,
Yeah.
and then so you're saying it's 21 million, but then it's going to replace it could replace all of
World's
the
money.
world's money. I'm going to do that. If there's only 21 million, there's a lot more people and transactions in the world than 21 million. Like,
Well,
how does
like
that
I said, like you can have a dollar and it's divisible into
into
100 cents. You can have a Bitcoin and it's divisible into 100 million smallest units, which are called satoshis.
right?
So, and then it can actually be divided even more than that. So if that becomes a major problem, we could fix it by just everybody in software agrees to move a decimal point over one. So you still have the same, but you just have a decimal point over. Uh, and there's actually current already solutions that allow you to pay 1/1000th of that Satoshi. So you have a Satoshi right now is worth, I think, 0.0004 cents or something like that.
So,
And they can make it even 1/1000th of that. So there's plenty of room to grow. It's all just numbers on a computer, so you can.
okay. What is it? Satoshi.
Satoshi.
So you've got Bitcoin, and then a Satoshi is
A Satoshi is like a penny to a dollar. And a Satoshi is 1/100 million. So that's
So you've got
eight
coin
decimal
worth
places.
one.
Eight decimal places was the last being one.
Okay, that's a lot of noughts and crosses.
Right. Right. So there's, like I said, it's just numbers on a screen. If you need to, you can move a decimal point over to make it work. If a Satoshi becomes a dollar, you need to divide it more.
So what's the difference between, like, just, it almost sounds like, well, let's just print some more money, which you're saying
Uh,
in the other world is like, well, just printing some more money doesn't work. So what's the difference
you're
between,
not adding money though. All you're
you're
doing
just
is,
reducing it,
yeah, you're just saying that
you're just watering down the whiskey?
kind of. It's usually our yeah, hard to think about because usually our money keeps losing value. So like
Yeah,
people want to get rid of the penny and replace it with just like only 5 cents as the lowest.
yeah.
But imagine if we went the other way. Now we just divided the penny into four pieces. It's still the same
It's
money. It's just that you divide that penny into more pieces.
okay.
Um, regarding that technology, like people are early and stuff. So yeah, for one, everybody's early because it's not even being used as money. But regarding what it can be used for, so one of the concepts that I like telling people because it's kind of a mind blower, it's the term for it is called autonomous entity. So actually, let me step back a bit. With regards to Bitcoin, when I send you money, it's I have a piece of paper or whatever, and I write from this account to that account, send so much, signed Michael, and then pass it to you. That transaction is actually a contract where I'm saying that in this digital contract, uh, this amount of money gets transferred to you. But the contract can be quite a lot of different things. So, for example, I can say that uh, this account uh, send this much if this person, this person, and this person signs it. So now you have an account that can only be spent from with like multiple signatures. Like you have checking accounts where you have multiple people sign, right? And it's built in. Or I can do, let me see if you can guess what business this will replace. I can say this transaction will happen if this account uh, is equal to or more than this amount of Bitcoin, and it expires on this date. So if by that date there's more than that Bitcoin, then this account, everybody agrees that which we'll call that account, this contract is legit and they include it in the blockchain. If it's less than that amount of Bitcoin by that date, then everybody just rejects it, and any money that was sent into it gets sent back. So, and it doesn't matter who pays into it, just anybody can send money to that address. But if that address is not equal to a certain threshold by that time, the money goes back, because, but not even go back, it's just the whole thing is rejected. You've heard of a Patreon or, sorry, a Kickstarter?
Well, I was going to say, it's like a crowdfundery thing. You don't get enough money, then you're not paying.
Right. Except instead of a company collecting these money,
Yeah.
it's just
That's a good point.
well, you have to trust the person collecting, right? Another thing, and this is going to change banking considerably. Remember I mentioned how you can have an account where 3 people need to sign off on it in order to go through. So you can have money in an account where you have one of the signatures, a bank has one of the signatures, and the last signature is stored in a safe deposit box someplace. And in order for a transaction to happen, only any 2 of those 3 signatures have to sign off. So now, every time I spend, the bank can check whether, like Visa, they check who's spending, where they are, what time is it, and then they kind of keep an eye on, like, is it stolen or not. Every time I spend, the bank can verify that stuff, and if it sounds legit, they go sign, and the money goes through. But then let's say my phone is stolen. Somebody has that signature, but without the bank co-signing, they can't do anything. Or the bank gets robbed, and their signature gets stolen, but without my signature, they can't get anything. Or let's say the bank disappears, now the signature is completely gone, but I have the signature on my account and I have the signature in the safety deposit box, I can still pull my money out. And at that point, the bank can provide the exact same security services of verifying transactions for you, but they have actually no custodial ownership of your money. They can't take your money because you have those things, right? And then there's a whole lot of these other things. What I was going to go into was the autonomous entity. Bitcoin is the very first money that is can be entered. So to this point, if you wanted to you have to go to open a bank account or your business name. That money is sitting in a bank account, and then your the banking the financial software or whatever that would connect to the bank and talk to the bank and do that transfer itself. But it's still linked to a person or an entity or a company or something. With Bitcoin, in order to make that transfer, like from me to you, send so much, be valid, all I have to do is have this the private signature that it's called the private key or whatever. All I have to do is like know this way to sign this transaction. But this signature is just a digital key that I know, or could be on your phone, or could be in some piece of software. So now you can have, instead of having a bank account, and another benefit, if you want to open a bank account, you go in person, you approve a lot of things. If you want to open a Bitcoin account, you download, install an app, you're done. So for the first time, you can have software that can hold this private key, which means you can have software that can own its own money and control its own money directly. Like if the software wants to send some Bitcoin to somebody, it doesn't need to tell the bank to do it. It just creates a transaction, signs it, and sends it. Now imagine if you have some car and it is able to own its own money. You can have an Uber that earns its own money for itself, drives people for itself, pays for its own gas, pays for its own repairs. If it's
Wow.
earned its own money, enough money, it can buy another copy of itself. So you have another Uber. Uh,
That's okay.
right.
That's a bit
And
that's a bit
that's what's called an autonomous entity, where now there's an entity that's not a person that is able
that
to
is
actually earn money itself, work by itself, pay for its own things,
wow.
compete against itself. We actually came up with that idea when um, there's a guy named Mega.com was the company, a guy named Kim.com ran it. So he had a file like Dropbox or something, a file sharing service, and people would start posting like music and movies to it, which are like copyright infringements. And he went to jail for it because he was running the company and he was accused of not doing enough due diligence and keeping that copyrighted stuff off. So our thought was, what if we write kind of like a computer virus that installs itself, knows how to install itself on like Amazon or Microsoft servers. It has its own money. Sorry, its own money, pays for storage, provides a set of sharing, but it's just a computer virus type of deal or computer software all by itself. And then if it earns enough money, it can hire developers to teach it how to expand it and find different things, hire developers how to make itself better with regards to like more efficient or better user interface or whatever. And then if the government says, hey, this is copyright, like who do they go after? It's just a computer program. And then my actually college thesis was on autonomous entities replacing some of the, I guess, jobs that we have. Like might have an accounting autonomous agent where that you hire a thing and it just automatically competes against itself or others to provide accounting services or some other services. And with regards to AI development, so we have artificial intelligence, which you tell it if you do this action, this is good. If you do this action, this is bad. And AI evolves based on what is good. But Bitcoin to actually survive by storage space, expand itself, stuff like that. So in a way, now Bitcoin becomes instead of artificial, it becomes real food for this AI thing because now it actually has something that it can use to survive. So now it has an actual like real evolutionary incentive to figure out how to earn more Bitcoin in order to expand itself, and so it can compete in the business to make more money to live. So even though we can say this is bad, this AI may figure out, well, but if I do it, I earn more money, so I'm actually able to build and expand and survive better. So
while the AI is surviving better, how is the human surviving better in that?
well, the AI would have to provide a service in order to earn money. So we still have to provide it with services. But then part of my thesis was like, how can this go wrong? And let's say you hire an autonomous agent that does it for you, and it tries to do better accounting to be more efficient. And then someone gets into it and shows it that if serve party folks can actually earn a lot more money, and now your thing is like getting into corners of others. Right.
Wow.
So it can go all kind of weird stuff. But yeah, so and that's why I'm saying like the money part of it is just the beginning. There's so many
Other applications.
crazy things that we haven't even thought about. It just like when we started with email and ended up with Uber.
Yeah.
Yeah.
Mm.
And then just even with money, the five key aspects of money are scarcity. Um,
I'm just going to say scarcity.
Scarcity. Scarcity. Right. that in Australian. Fungibility means that
Fudge.
fungibility.
Fungibility.
It means that $1 is as good as the next dollar. Like you have
Okay.
no preference over it. If it's let's say we're dealing with fish, this fish and this fish might be different because this one is like older, more rotten than this. So there's no fungibility. Money requires fungibility because you need to be able to mix it up. So like rice was money for a while. Rice has fungibility because one rice is the same as the other when it's dry. Divisibility, which is how easy it is to divide. Portability, how well it's portable, how easy it is to compare to ancient money. Rice was used as money in China for a bit, so we have divisibility because rice is easy to divide. It has portability is kind of you can card bags. Fungibility is pretty good. Trying to remember all five. Durability is pretty good, but scarcity is not that great because harvest comes in and it's great. It goes up, your money value goes down. You also have a problem of like, if I'm really hungry and there's no food, do I eat my money? So it messes it up. And then we have gold is one of the really good things, but gold failed on some of those things. So we have scarcity in gold because gold is extremely hard to mine. And the reason that gold ended up beating like silver and all the others is mainly because it's the most difficult to mine money out there. The reason it's important is because you know that the value of this gold today is going to be worth pretty much the same much later because there's nobody going to suddenly increase it. Fungibility in gold is pretty good too. Every piece of gold is the same as any other piece of gold. But then the problem is with stability. Long distance, you can get a route. The whole durability is obviously very good too. The visibility was the one that actually ended up killing it because as the value goes up, now you're paying for stuff in gold dust. Like if you wanted to pay for a Starbucks cup of coffee in gold right now, you'd be having this gold dust and you're worried about losing it someplace, right? We solved the problem with paperback securities, which is now you have a piece of paper that says how much gold, and the gold sits in the vault. It did make it more portable and more divisible because on paper you can make so many atoms. But that created a big problem of IOU. And one big will come as Bitcoin is like, it's not backed by anything. Like, what is backing Bitcoin? If something is backed by gold, it's good. If something is, and Bitcoin is not backed, it's bad. But backing is an artifact of us living so long on backed stuff. If you think about it, backing is just an IOU. You'd rather have the actual asset, not the backing. You don't want the gold back something. You want the gold. You don't want the oil back something. You want the oil because whoever is backing it can. They say they have that much gold, but they might not. They might make a lot more papers, but they don't. So because of gold's failure for portability and divisibility, we were forced to go to paper. Backing was an IOU. And as always happens, banks and then eventually governments, they get greedy. They figure nobody's going to go for the gold all the time, so they make more papers, thinking they can get away with it. And then eventually we ended up in a situation right now where they have way more paper than gold, so they just broke it off and said, you're not getting your gold, just use the paper. Or in bank's case, it just collapsed. So that's why we can't really go back to gold anymore or gold back because we already have centuries of proofs that it's an IOU based on trust that'll eventually collapse. With regards to Bitcoin, we have durability where Bitcoin is information. If you want to back up your Bitcoin, like if you take gold from Europe to the Americas and a ship sinks, you're screwed. If you take Bitcoin from Europe to America, let's say it's on a ship and it sinks, Bitcoin is just the private signature that allows you to store copies of the private signature as you want. So if you lose your phone and your Bitcoin is on your phone, as long as you have a backup, you can always restore it.
So if we go to that for a minute, so I had an issue with my phone. Had to change my phone, and then when I tried to log in to one of my apps, then it didn't recognize me, and so then all this data that I had on the app, they're like, we can't help you. You need to go to the phone. The phone says you need to go to the app, and then it's like all of this data is just like gone, and creates some major havoc. So what's the risk? Because I've heard people saying, they can't open their wallet, or they can't find their password or something like that. So what are the risks that you've got all this, and then you can't access it?
So I'm going to get back to it in a second. Just going to go through those files real quick. So we have durability because you can back it up. It's information. Information doesn't go away. Portability, it's information. You can send it over the internet. Like gold is not going to work today in the digital economy because it's physical. Bitcoin works on the internet or telephone or whatever you want. Divisibility, it's just on the computer. You can divide it as many times. As any other Bitcoin. Scarcity. Gold is designed. Bitcoin is the most scarce asset in existence because no matter what, you can never have more than 21 million. So everything else, you can eventually come up with more. Bitcoin. So in that sense, gold is much better than any other money out there, but it still has those shortages, and then Bitcoin covers all of them. Regarding your question, so the current standard for backups is like 12 words. So as long as you have those 12 words, that can give you access to all your account information, for the private signature. Those are your private signature. But you don't know nobody else. So regarding either they didn't make a backup, so they just lost it, or they had a backup and they lost the backup as well. So there are a couple of solutions being made to that. One is that easiest one is you just make multiple backups. So you can have like one at home, one at your family's home. Just like let them know that don't share this with anybody else. You can have backups that are split in multi pieces. So you can have a backup where it's 2 out of 5. So as long as you find the 2 pieces out of 5, you can put the backup together. You can have custodial services, like if you don't trust yourself for security, you can use Coinbase, which is a custodial service, or an exchange, and they work like a bank. So they do the backup for you. They have control of your money, unfortunately. So the downside is they can freeze your account. They can, if they're not trustworthy, they can spend your money and disappear. So make sure you use. It's like with any bank account, they just like steals your money and disappears. Make sure you use a good service.
So what happened to that traceability that no one can take your money thing?
If you hold your money, they can't take it. But if
you're saying, hey, look after my money.
If you have cash in your wallet, nobody's gonna take it. But if you put your cash in the bank and the bank fails, or the bank is a scam and runs away with it, like they have your money, you don't have your money.
So okay, cool, because I didn't know about that bit. So how then do we work out who is the legitimate bank? The scam.
Just pop up and respected banks.
And who regulates them?
Same financial companies same financial agencies that regulate banks. So if you were to go to us, let's say it was Coinbase, they're regulated, they're well established. On top of it, they're even insured. So if your Bitcoin are lost or stolen, the insurance, they'll be able to recover, just like if the bank you're doing banking with gets robbed, the banking insurance will recover your funds too.
So why would you use the bank versus doing it yourself and having that risk? What else is the bank going to do that you're not going to do yourself?
With the bank, you have the benefit of they handle the security for you professionally.
Sorry, let me turn
No
that
problem.
one off.
The bank will handle the security for you. You open up such an exchange in Australia and you end up wanting to move to the US or do business in the US, there might be issues where your money is stuck in that Australian exchange, and unless if you have Bitcoin, you can send it elsewhere, but there might be regional kind of issues. But the main concern is that they're in control of your money, and as long as they allow you to use your own money, like any other bank, as long as they allow you, you can use it, but for some reason they might say no, you can't use it. Like what happened recently in Canada when the people were protesting and Canadian government said, no, we don't like it. So they started freezing people's bank accounts. So even though it's your money, the bank might say you're not allowed to use it because you did something and we don't like it. So now it's stuck. Versus if it's on, you are in charge of your keys, nobody can say anything.
So just so you know, you're not selling the banks right now. No, I'm not buying the bank bit. So.
No, it really, it depends on it depends on a person. So like if you don't care, you're not doing anything kind of iffy or whatever, you're not technically actually set out to provide the security yourself. Go with such before you, or you might go with the bank that I described where you own one of the keys and they own one of the keys and then another lockbox has one of the keys. So people who own like hundreds of millions of dollars worth of Bitcoin, that's what they do, where you're still in control. The bank provides the counter signature stuff, and then the lockbox, it's under your control, but it's in a very, very difficult to get to place. And if somebody robs a lockbox again, they won't be able to get anything out of it. So in that case, you are still in control. The bank can't freeze it, but they can co-sign it with you.
So you can have, I guess it's like anything, you can have some in your back pocket, and you can have some in the bank.
Yeah.
You can have.
And with Bitcoin, you can also have some in between.
Yeah.
But if you're somebody who, let's say Argentina, heavily oppressive government, where everything, money to go down, and didn't want people to secure their money by buying something else, so they had currency controls. So what they implemented is, in order to try to defend the government's money, they made it so you're only limited to $250 worth of purchases a year online, through Amazon. Anything you buy over that has a 50% tax to discourage people from sending money abroad. So if in that case, what some people did was they created a service that allows you to shop on Bitcoin on Amazon using Bitcoin, and that totally bypasses the government thing to the side. And because people are in control of their money, they can do that. Or there's a couple of charities in a certain Middle Eastern country that does not allow women to work, especially doesn't allow them to have bank accounts. So what it does is women, it teaches women how to do web development, and it's like a little club place with computers. They come in, they do this work, and they open up Bitcoin accounts, because in order to get a Bitcoin account, you just install an app on your phone. And these women, they work for international clients. They get paid in Bitcoin. It goes to their wallet. If that was going to a bank account locally, that'd be right. Yeah.
Wow.
So why am I in Bitcoin? Is specifically for the financial freedom thing. So for some people, they may not be tech savvy, and they may be in a comfortable situation where they would rather have a custodial service like a bank handle. But my overall goal is to make people are in charge of their own. You spend it on one without anybody telling you what to do with it.
Cool. So as the expert and the authority you are in this, then you're mostly working with those people in business who are wanting to put who want to create that foundation in their business. Is that what you enjoy? And
So because I know that Bitcoin is deflationary, means it's the value of it will go up. The amount of it deflates. So the value goes up versus dollars that are inflationary, where the amount of it inflates, the value goes down. Because of that, I know that Bitcoin will eventually overtake all the other government currencies. I know that it will. Well, it's already providing financial, I guess you can call it sovereignty to people who use it, because now you are the bank, you are in charge of your own money, you're in charge of how you spend it, how you store it, do whatever you want with it. With more and more technologies, it's getting to where it's not you do what you want, but nobody can do or say about use a lot of that. Like countries are banning Bitcoin or they're banning something. Banning it and actually enforcing it are two different things. Like Venezuela banned it, but there's no actual way to ban it, right? So part of it is financial sovereignty. Part of it is because, well, like I want to give people freedom to do that. Part of it is because I understand that the long term is going to be a crash of crash of the other currencies, and we know that when that happens, it's going to be a lot of chaos, a lot of economic destruction, a lot of bad things. Like look at Venezuela, for example. So I want to get people. Bitcoin is basically the lifeboat that saves you from that, especially as governments are running out of money to pay for their services. They are forced to print more and more and more money. That causes the value of crashing index of foreign assets and rich assets. So I'm trying to get more and more people into the safety, the new thing that's going to replace it, so they're not left with holding worthless dollars, running out to buy like shovels and something else just to make their money be worse.
So really creating a solid and a stable foundation for the future.
Right. Yeah. Regarding what I'm doing is I'm helping build the companies, the wallets, the software, the services to actually make it be usable, because you need to build that network effect of businesses that accept it. And then, yeah, with businesses, I make it easier for them. I help them accept it. I help them understand it. I help them invest in it. I help them kind of get why it's an important thing to move into.
I mean, that's pretty cool as a business, because what's having the team understand it and your ability to explain. Then, if you've got a company on board and the other half's not on board, then your ability to bring people together, to collaborate around it, to go, okay, this is why we need it, and this is how we're going to move forward, and we want to safeguard ourselves. So then you've got the company secure and the team and everyone else that goes with it. Then your ability to create that sort of that management and that stability there that allows them to move forward with all of these different components is pretty extraordinary.
I found that it's actually that if I meet with a business, usually I meet with just a business leader, but if I meet with the entire team, what happens is the business leader realizes that this is something that they need to be prepared for in the future as a future payment system. But then all the employees also realize that this is something they need to move into well, one is to make more money, obviously, because it'll go up, but two is to protect myself from anything that might happen in the future.
Yeah, so then it's multi-level, because always you're going to start with the leader, and the leader has to have that foresight and be open to exploring, cool, there's a different way and there's a better way. And then, of course, if you're a leader, you need to get the team on board. So then you're creating, again, that foundation that secures the business. But then in the same time, you're actually educating not only at that business level, but then everyone's being educated at a personal level.
Right.
So it's multifactorial. Like, you get human, cool. That's always going to be leader. And if the leaders are not on board, you try bringing it up from the bottom, it's never going to work. So it's got to be from the leader, and then it filters out. But then I think the thing that, again, because you've got those four things that you've got, some people come in and they have a little bit of expertise in one or the other, or experience in one or the other, but you've got, that whole foundation that you're talking, economics, finances, tech, Bitcoin. So I mean that's a rare thing that you bring to the table, and then you're able to motivate people to go, yeah, this is what you're going to do, this is how you do it, and then you create it. Because again, the leader's not going to put the thing together.
Right.
It's the team that's going to put the thing together, which is your ability to bring people on to get, okay, hey guys, this is what you need to get you on board. The leader has to understand enough, and your ability to be able to bring everyone together to go, okay, these are the pieces that need to be done. Hand up who's doing that bit. So you get the team on board, then you've got the collaboration, which again brings the mission and the vision of the company further forward. Well, if the company's doing well, then the team's doing well. Well, the team are like, I'm on board because I want to stay in the company.
Well, in a way, it's also who needs money. Like if we're talking about money, who uses money and needs money? It's like everyone.
That'd be like
and
you.
Yeah, and Bitcoin is money. So when I
Yeah.
talk about like money, it will affect business and individuals and everybody in between, and even these AI autonomous entities too. Right?
Yeah, absolutely.
And then the last thing that actually, so people might be wondering why Bitcoin people are like so obsessed about it, like it's a cult. And a lot of times I think it's because you make a lot of like, we made a lot of money, so obviously it's for money. It's not really that. Like money is the side effect benefit of what we get out of it. But um, like in summary, we're doing it because we see Bitcoin as something that's going to save the world, basically.
Yeah.
So and so popular thing going on right now is like the rich are getting richer, the poor are getting poorer. So one of the major causes of that is something called the Cantalon Effect, which is that if you're somebody who can print money, or you're somebody who's close to being able to print money, what that allows you to do is you print, let's say, $1 billion that you give to yourself as a government or bank, and then you take that money and you buy an asset. Let's say you buy a lot of properties with that. Now your asset is fixed in price and you own an actual asset, while that dollar, the rest of the dollar kind of percolates through the economy downwards to the rest of the people. What happens is, like, as you created $1 million, what you actually did is you did everybody else. You gave yourself an asset, everybody else's savings and paychecks and income, everything goes down.
Yeah.
And at the same time, as you're buying those assets, you're reducing the number of those assets in the market. So the price of assets go down. So we see that as all these big banks and massive companies and governments and stuff are getting richer and richer and richer, and the rest of us are like housing prices going up, and there's not as many of them available, and my income is down. So over the long run, that creates this massive disparity, right? And then where Bitcoin comes in, there's no way for anybody to actually print that money. So if you want to make a lot of money with Bitcoin, you actually have to provide some sort of a service that'll actually convince people to get Bitcoin. So it eliminates the massive in the world who are living under this thing. And it provides the tools and power of the banking basically to anybody with a phone. Used to be you wanted to send a wire to somebody like instant settlement, you had to go to a bank. Now you have that in there. If you wanted to set up an offshore bank account, which is only available to, like they call Bitcoin is an offshore bank account in your pocket. You install an assets, an app, create an account that's in your pocket, nobody knows about it. And now all these more complex tools of multi-signature and stuff that I explained, used to be that banks and some legal firms would do it. Now anybody who codes or installs an app do this. And then kind of bring back to touch on the environmental. So environment The reason is when you have deflationary, we call them hard currency because they're hard to make, like gold. Um, you know that this money will go up in value over time, so it motivates you to save. So you're storing money to save up, and then you can eventually invest it in some bigger things. If your money is deflationary, not only is this money losing value, so you're motivated to go out and spend it, the other thing is it does is imagine if you had a loan in a deflationary currency where the amount of money, the value of the money goes up.
Yeah.
That would mean that you would have to pay more and more and more and more every time. So it's a very bad idea to take a loan. In an inflationary money, let's say you buy a house and your mortgage is, let's say, $1,000. 30 years down the road, that $1,000 is worth almost nothing.
Yeah.
Same as credit cards. So cards are your rolling, but you have much more incentive to borrow and spend. So inflationary money is a smash, which results in a bunch of like cheap Chinese crap and trinkets and other stuff that we buy, and that all goes up into a landfill. The other bigger issue is what's called malinvestment. So this will be more for an investor type, and you're in business, so you might get it too. So let's say you see an investment, and this investment is promising to pay you 2% a year return.
Yeah.
So you have cash that gets you 0, or you have this thing that gets you 2%, so you obviously will invest 2% into it. But then let's say you, and this is assuming your money is not growing, not doing anything, it's 0, so 2%, good. But now let's say that your cash is dropping 3%, but then you have 2% return. So rather than cash doing nothing, because you're getting a 2% a month, just you have $100, it's still $100.
Yeah.
Now it's $2, but otherwise it's actually less. What that actually creates is that you are now investing in a company that you think is earning you 2%. But in reality, it's actually losing you 1% because the money that you invested, the return is in dollars, but the dollars are actually losing 3%. So that's why you have a negative 1%. That makes sense?
Yeah.
So in reality, even though this looks like a good investment, like prices and returns, they are a reflection of how well you are investing in resources and funds and other things. So in reality, this is burning 1% every single year. This is just being spent on something that people don't actually need, or the resources that they all spend. It makes an illusion that it's a good return or a okay return, or at least keeping up with stuff. But in reality, you're actually causing more and more environmental destruction in that way. And as inflation increases, like inflation here is like 8%, you might say, well, I'm going to invest 8% in this company, and now I'm keeping up with inflation, so I'm not losing any money. But what's happening in reality is this company is collecting all these resources, spending all this energy to create all this stuff that are going to be in the garbage, but the actual return is 0. Like, seeing a lot of this malinvestment in the 2008 bubble when all these real estate investment developer companies, they just went out there because the inflation was high and because the interest set by the government was high. They went out there and started building and developing all these properties. And then when the reality hit and things went back to the market, now they realize, well, these properties are not actually going to be worth what they wanted to be. So all the human resource, all the materials, all the energy to build these houses that nobody wants that aren't even finished is just, it's a waste.
Yeah. This time we were paying 18.5%. Like that was, look at it now where, it's a very different thing, but it was, for those who had investments back then, it was fabulous. But for the rest of us, like everything just kept skyrocketing. And again, but you got 2008 and I don't remember when
Right.
when that was, like back in the 80s. It was just like, again, it was a boom and bust time. I think one of the other important things for the listeners to explore, you've done the work, but you've also had failures along the way in the various things. And one of the greatest things is we learn from our failures. We often don't learn that much from our successes. It's like, oh yeah, tick, oh that's good, that's good. Whereas when we're actually looking at, you know, work and that didn't work, and then so I think having, as business people, that you're constantly going, well, does this work or it doesn't work? And then when something doesn't work, and I think that's the thing with the whole economy, but especially if you go into the individual, what didn't work for you, what didn't work for me, then you have so much experience of both the technical training,
Yeah.
the experience that you've had in the corporations and the businesses and things like that. So it's not like, oh yeah, it's just all fabulous all the time. You've got a whole lot of lessons that you've learned from what not to do along
One
the process as well.
one biggest mistake I've found that people do when they hear blockchain technology or Bitcoin or crypto or something, it kind of dazzles them, and they think it's like a whole different world. So they end up investing in things that end up losing them a lot of money, just because they think, well, it's this thing, but it's with blockchain, or it's this idea, but it uses crypto. So they think it's like, oh, it's going to be something new and better. But what I always suggest is go to business fundamentals. It's not anything different. It's just it's the same business. It's the same. I mean, technology might be a bit different. It might be more efficient. You still want to research the technology, but you still want to see like, does this idea make sense? Um, are the people behind it the
Yeah.
right people? Because like, if the idea is good but the people are bad, you're never going to do anything with it. If the idea is crap but the people are good, you can maybe improve the idea. So are the people good? Is the company good? Is the idea good? What is a unique selling proposition? What is a competitive advantage? What kind of funding it has? What kind of support it has? What kind of market just doesn't make it any from these. Always invest in the diligence.
Due diligence.
Pretend like it's a normal, boring mom and pop shop, and then just do the same kind of due diligence on them as well.
Yeah.
And regarding Bitcoin mining, so there is a big complaint about it using a lot of energy, but one interesting thing about economics, and I was trying to figure out what word to use for that, it's both interesting and annoying at the same time, is that it's very counterintuitive. That's part of the reason it took so long for humanity to kind of grow from slow to suddenly increase, because we figured out how you now think it works. So to give you an example, uh, we had um, a long time ago we used whale oil for like lighting and stuff,
Yeah.
right? So what happened was we would hunt more and more whales. We get more and more development pushing for the whale oil. And then what happened was, as number of whales got depleted, it became much more harder to find them and hunt them. So the price of whale oil went way, way up. And eventually it got to the point where it motivated us to start looking for alternative sources. We had like crude oil for a long time, but usually when you find crude oil in your property, it was considered a terrible thing to clean up. It's to destroy the property. But once whale oil went up to a certain point, um, it gave us an incentive to look for alternatives. So we figured out, oh, we can use crude oil, and then we found ways to refine it. And as at first it was expensive, but as more and more people started using it, because of um, the scale of productivity increased, each unit productivity dropped, so it became cheaper. We started finding better ways of refining it, more efficient ways of keeping it clean. So basically, without us putting any bans on whale oil or whaling, what happened was whale supply went down, price went up, something else ended up crossing it and figuring like matching it, And then due to increased production, the price of crude oil started going down. And at that point, we didn't even need whale oil anymore. So before we even bought our meals a day to stop whaling, it was too expensive. So, I mean, things you would think, well, we are depleting the whales, so we must put a stop to whaling because we'll stop, well, like we'll kill all the whales or something. But if we had done that, what would have happened was that now we're limited to a certain number of whales being able to be caught. So now oil amount is locked at a certain price. It never goes up to the price where now it reaches parity with new research, and we'd be stuck in like basically using whale oil for a long time, where we'd be just managing whaling, so to speak.
Yeah.
Um, so, but there's a, and unfortunately I can't think of them, but there's quite a lot of these kind of weird, counterintuitive things in economics where you think like if you do this, it'll be better, but actually it would be the opposite that makes it better. So with regards to Bitcoin mining, you're throwing dice trying to get this number to secure your block.
Yeah.
Proof of work, but what you're paying for that figure out. So that is core what you're you have the most efficient source of electricity because the higher electricity, the higher cost, the less you'll make in Bitcoin. And you're also proving that you have the most efficient computer processors because the more efficient your processors, the faster you can throw the dice. So proof of work is in effect you have the cheapest energy and the fastest processors. And as more and more of these Bitcoin miners are going to be getting developed, they're going to look for cheaper and cheaper and cheaper sources of energy, and they're going to push money into more and more efficient processors, which um, the cheapest electricity is free. The closest we have to free is wind, hydro, solar. So Bitcoin has actually been already been a massive, massive push to solar. Um, something is the actual value of, I guess, energy and the resources that goes into it. And right now, a lot of solar you buy is usually government subsidized. And the reason that is because if you or a company were to buy solar by itself, a lot of times it would never even break even. So the amount of electricity you earn will. But what that says is that the amount of energy, the human resources, physical resources, and electrical resources put in to create the solar panel is actually more than what the solar panel will produce over time. The efficiency is getting better, but we're at a point where it's worth about the inflection. But for a long time, that's something that you would need government. Because if it was more efficient, then I would do it. Because uh, so, but with Bitcoin, because you are able to produce, um, well, for one, once you hook it up, you just basically are printing money, so to speak. Two, it's not limited to any location. You can have a hydroelectric dam or a windmill like middle of nowhere where nobody lives, and you can still make money on it. And three, because with Bitcoin mining, it has actually been making, it does pay for the solar because if you just buy solar and you use it, a lot of it goes to waste.
Yeah.
Like lighting, who needs lighting? Well, we need lighting, but it's not making any money, it's a loss.
Yeah.
With Bitcoin, it's actually a gain. Now Bitcoin has actually created a real market demand for solar for crude oil started out expensive, more became cheaper and cheaper. Bitcoin pushing more and more development of this innovation that would have never happened before. Yeah. So over the long run, what will happen is that miners already just starting to be like motivated to do that, and well, they've always been motivated. They're just starting to do this, where they're pushing for energy innovation, where they're actually investing in like solar and other research to make it better. In the long run, miners will be creating all this abundant energy that they're trying to get as cheaply as possible that is also available to the rest of us. And they'll be pushing for creation of as fast and efficient as possible processors, which we use in everything else as well. So even though people are saying, oh, it's burning all this blah blah blah, for one, it's not. Majority of it's because it doesn't have to be anywhere in particular. A majority of it being used plants or some places that are just energy. And two, it'll make energy more efficient for everybody else.
Nice.
So another reason why I'm so.
Yeah.
There's a lot of reasons.
There's a lot of reasons. Yeah.
And other reasons we're in the cult. Gotta push it.
No, I mean,
right. As one of my friends says, money doesn't it doesn't have value. It's not anything. It's just like the piece of paper with ink on it. It's just a piece of paper with ink in it. Yeah. The reason it has value is because we believe it has
we give it value.
And you the biggest cult is the so that's another reason why we'll probably win because it has the most devoted followers.
Wow, that's awesome. Wow. So yeah, folks, if you need any further information, if you're a company and you're ready to take your company to a new level and bring your team along, get them on board, then
hopefully I answered as many questions as possible. I mean, if you have any more.
Yeah, if you have any more, let you know. But yeah, that's been awesome. So thank you very much.
Thank you.
Cheers.